Well, it's great to have you today. I did want to get your perspective on the move we've seen in precious metals over the last couple months. Obviously, this has been significant, and a lot of people have been waiting for gold to finally break out above to sustain that $2,000 level. And there was the question, is it support? Is it resistance? And the market has answered that it is now support. And we've gone to $2,400 gold. We're off that a bit. Your perspective on the general state of the markets right now?
Right now, the precious metals markets are pretty much in a consolidation phase. You could say from a trading perspective, they're overbought and they need to take a breather. The old adage, back and fill. So we need to gain another level of support for both gold and silver. But adding on to what you opened with, Elijah, wasn't just 3 months ago that we were kind of wondering, is 2,000 going to be support or resistance, as you said? And of course, obviously, it's now support. We got a nice big move up past 2,400 US dollar terms. And I've been asked to write a missive for a publication, which I write for 3-4 times a year. And he wanted me to comment on the gold's all-time high. And in that missive, I said, it's only a nominal all-time high. If you use the U.S. government CPI calculator, so we're using their numbers, you need $3,222 gold to equal the purchasing power of a 1980 $850 gold. I think that's important, really not for maybe our viewers, but someone that's coming on board now, like, gold is too high. It's its all-time high. It's all-time nominal only. So coming back to the other question, I think I looked at the chart. I mean, I've done a lot of technical work. I don't feature it a lot in the Morgan report, but we look at it from time to time. It looks like it could do a head and shoulders top. I really doubt that with the all this going on geopolitically, the war drums, the conflicts increasing with Iran involved now. I mean, I can see a correction, a high-level consolidation further. Silver's launched later than gold. We all knew this time gold had to lead the way it has. I really want to see silver over 30. And from my perspective, Elijah, to finish, I do not see this as the high point for the year. I think we're going to get over 30 for silver and probably hit the 25 mark at least in the gold market.
Now, in the short term, obviously, we are seeing some consolidation. And if we look at the COT report, the banks are very short silver right now. So the premium in Shanghai means is that there's an arbitrage opportunity where physical metal can then go from the west to the east. So there's also, we've talked before about the BRICS and how a lot of those countries and their central banks are accumulating gold. And it's maybe a concerning development for people in the West, because it's like, well, if Western central banks and countries are not valuing gold in the same way that the East is, then there may be a shift in, the who actually has control in the future. Your perspective on that?
Well, absolutely. I mean, the idea that he who owns the gold makes the rules, that's pretty much been a fact for centuries. I mean, you get somebody as smart as Martin Armstrong, and he probably argue that point, but from a long-term perspective, it ebbs and it flows. You go from a gold standard, which isn't the best, but it's been one of the best, into morphing to a fiat standard that collapses, and then come back into a asset-based currency. So it kind of goes, and this is very broad brush. It's not the exact monetary history, certainly not, but it's sound money, non-sound money, failure, back to sound money, off sound money, failure, back to sound money. That's kind of the, again, broad brush view. So if that's the case, that for the next system to really work, we may be proposing a CBDC that doesn't work and needing to buy gold, and the East has most of the gold. And there's also a subset to that as a kind of a proof, like you're doing a proof on a math equation. And the proof is if you follow where the gold trail is, it's always the producing nation. So if you go back pre-US, where the US held most of the gold, it was held by Great Britain. and they were the main producers. Yes, it was a colonial system and all that, but under the UK umbrella, they produced the most and had the most gold. Then you go to World War II, and we, the U.S., produced the most production, and mostly the war machine, and then post the war, housing, cars, freeways, everything else, and all the gold, not all, but the lion's share of the gold went to the U.S. Now the lion's share of the gold has gone to China. So it just follows. You can say, well, wait a minute. If you just, follow the money, one of the best things we can do in journalism, it doesn't, get the personalities out, get the bias out, get the politics out. Just look at where the money's flowing. It's gone from the UK to the US to China. What does that mean? Well, it suggests strongly that you're right, that we're going to see the Chinese have the commanding, maybe not currency, maybe not global currency, but certainly a much higher status in the financial market or the monetary system than we see today. And if you take it a step further and look at their CBDC, which is by far the most advanced and most utilized in the world, maybe that's it. And they're just using their gold as a backup plan or as a subtle way to reinforce their power if they get resistance to it. I don't know. I don't know the future, but I do know what it looked like in the past. And as Mike Maloney says, the further you can look back, usually the more you could go forward. So there's my 2 cents.
Now, I know I've talked to Clive Thompson, and he's talked about how really by far the U.S., if the official numbers are correct, still has the most gold. Your perspective on that, because obviously there's some question of, is there actually gold in Fort Knox and all of that? Do you think the U.S. has the advantage at this point?
I don't know. So let's be as honest as possible. I mean, Jeff Christian just did a video on, the gold's there. I don't know if it is, but I suspect it may not be. There's a guy named Bill Still. You can look him up. He did a pretty good analysis on what the gold situation in Fort Knox is. And let's just look at it the other way. Let's say all the gold that's purportedly in Fort Knox, I think right now it's like 263 million troy ounces is there. Location doesn't prove ownership. So every ounce that's on paper could be there, but yet it could be loaned out, it could be swapped out, it could be used as collateral for foreign exchange purposes. It could be, something that's used by the plunge protection team. So there's a lot to it, a lot more than seeing a line item written down on an official document that says U.S. gold ... and puts a number out there. I mean, I don't buy into that. For me, I want a strong audit. I want to see really, not only where it's located, but who's the owner of it. So I doubt that we have it all, the U.S., as far as ownership of it. Location, maybe. I actually doubt that as well, but not that that's that important, because it's not. It's the ownership. And that one isn't that hard to do, but yet the audit, I think the last time took place was in a full audit, was in like the early 50s. So it's been a long time. If it's all there, well, it's too expensive. Come on, folks. It's not too expensive. You guys, you Congress critters are spending $10 billion a day. So it's not going to cost $10 billion to do a complete audit of the gold in Fort Knox. Let's get realistic. Let's do one, and let's put this idea to rest so that Jeff and I can both agree that a full audit's taken place, and here's how much gold the U.S. owns.
Now, I did want to also discuss cryptocurrencies. You recently had a video on this, and the title was fantastic. It really made me think. It was, if Bitcoin is the answer, what is the question? So I think that's what we all have to think about.